afternoon, everyone. I am Nathaniel Rose. I am a data engineer for Ripple. During my spare time, I'm a DAOist. I'm actually joined by some all-star DAOists. We'll just go across the line. Boone, you want to introduce yourself?
My name is Boone Bergsma. I'm here on behalf of Carbon Land DAO. We're a forest conservation DAO focused on perpetual conservation of biodiverse forest land. And we're a sustainable DAO in that we generate carbon removal credits from the forest land that we conserve.
Right.
Right, so I'm Jax. Hi, I'm Xiong, but you can call me Jax. I'm a student at NUS under the NUS FinTech Society. So right now, we are doing this thing called ABC DAO. So basically, it's an education-run DAO, not for non-profit users. And basically, the goal is to educate students on what a DAO is and give them opportunities to get internships and projects that they might not ordinarily get, like just by being in university.
Great. I'm Jill Greenan. I'm a professor of finance and law, and I got really into DAOs because I was intrigued by their governance structure, and that was the impetus to start doing a lot of research and collecting data on as many improvement proposals and DAOs that I could.
Hi everyone, my name is Shuo. I run a venture fund full-time based out of Silicon Valley, and I'm also on the faculty at UC Berkeley with Jill under College of Engineering. I've been teaching entrepreneurship. Ended up investing into DAO space really early on. So now on the academic side, I've been trying to do more research to figure out best practices in corporate governance and hopefully yield some insights from there that will lead to better investments.
Great. So this talk is really going to be focused around governance and just common best practices. If we were going to talk about just DAOs in a general sense, we would be here for an entire hour, maybe two. So you could look at this more as just like, hey, what are different modern use cases that are being applied in different areas? And maybe it makes sense to start off with June. Since you've been working with the university students, how has been the onboarding of university students who may not have familiarity with decentralized autonomous organizations?
Yeah, so that's a really good question. So trying to educate like a group of students who really do not have any like insight or any knowledge into this DAO is really very complicated, right? Because like the onboarding really takes you have to understand like what is a DAO, what makes it different from just a normal voting system. So like this education process was honestly the hardest part because like getting people to understand what a DAO truly is was the main issue, right? So, but the way we educated them was obviously by giving them use case demos and by actually presenting them the application and showing it to them like, oh, this is what you do. This is what you do with a DAO. This is how you use it, and this is the benefits that you can gain from it. So those are the few key items that we try to tackle when we were trying to present our DAO. Not only that, like we also try to structure it in such a way that the moment they enter our DAO, we easily promote or present to them like what exactly was like this DAO for. So basically we wanted to say that this DAO is meant for education purposes only, is for your own benefit. Of course, like if you participate in this DAO, what can you gain, right? Like this is for your own benefit. So it's in your own interest for you to participate in the DAO.
So what actually is the consensus of how you're defining DAO? Is it more into the sense of like a capitalistic, like decentralized autonomous corporation, or is it an entity? How are students participating? How are you incentivizing them as well in that effort?
Yeah, so basically we try to make it as if it's like a governance system of sorts, where like basically the directors of our club will tend to put up proposals. Like for example, we have an opportunity in this company. Okay, we want to see which students are interested, which students are willing to bid more tokens or like stake more on this particular proposal. And of course, like if the student that bids more, we give them the opportunity first, right? So we try to structure it just like a general governance system, like a voting system of sorts. And of course, we have a few voting systems in place, like one of which being allocation voting, like loss voting, and conviction voting. So these are the few voting systems that we have. I mean, I won't go into each of them now, but yeah, that's the main way we are actually running it.
So this is actually quite interesting and actually relates to Shuo and Jillian, what you guys are currently doing with your research around control and influence in decentralized economy. Can you give us a little bit more details around that?
Yeah, so I would say we've looked at quite a few of them, and my thought is that what you think of with a firm is classic maximizing shareholder value or maybe maximizing long-term value. What you're seeing here is a maximization problem, if you're going to put it in one way, is maybe the sustainability of the protocol in the long term. And so that means you have to think about viability in different ways. And so you have to think about risks, sort of upgrade to the protocol, because how is this going to continue on even if it's fully decentralized? And so part of our research was to look at these governance processes. And so there's some sort of traditional ones. So Governor Bravo is probably the most commonly used one. So some people are adopting the same sort of governance system and porting it over, but there's also ones that are experimenting. And that's sort of some of the more fun stuff. So for example, Optimism has its basically, what I would think of as its Congress and its Senate. And so we're seeing if we can go forward with different models for DAOs. Unfortunately, I think what they sort of get a bad rap for, which many people have heard, is there's sort of lack of voter participation. And so I call it token turnout, but in our data, it's roughly 12% on average. But what makes me happier that it's only 12% is that when it is these higher risk or maybe viability of the protocol in the long term, upgrades, stuff like that, we are getting higher. We're getting almost 50% turnout. And if you think about that, that's important to see what's going on sort of and where this heterogeneity comes in. But I'll let Shuo talk a little bit more. I'm happy to go on too.
Yeah.
Yeah, Jill and I actually do similar research, but she's definitely looked at a much larger data set of all these DAOs, and I've specifically really focused on DeFi DAOs, specifically digging further into the 4 largest ones. And the way that we've kind of started to uncover the data is, as Jill started to already talk about, one is that we're noticing very different types of votes than in the traditional corporate governance world, because in the typical world, you really don't vote on things that C-suite or operational decisions would be typically made in the typical structure of a corporation. But in the DAO world, you see decisions made around literally everything, from things like what collateral we should be adding as a new market to things like, are we adding or getting rid of a person? And those would not be the typical kind of decisions that in corporate governance you would vote on. The second thing we're realizing is kind of representation of different voting groups. So we're seeing in traditional corporate governance, the typical suspects of institutional investors are a little bit different in the DAO world. So in the DAO world, from the DeFi research data that we've looked at, the largest voting group is venture capital funds, as you would suspect, because they're early investors into the ecosystem. But the second most powerful voting group, actually kind of relating to what Jax is talking about, is actually university blockchain groups. So a couple of the most active ones are Berkeley, Harvard, MIT, UCLA, and Columbia. And these are super active blockchain voting groups, and they're kind of the second most powerful and active in the DeFi space. And then the third thing of what I've been looking at in a more focused way is, how do people try to potentially manipulate this governance power because it's represented in liquid tokens? Do they try to buy, sell, or borrow tokens around when they're particularly controversial or important governance proposals to try to influence the outcome? And we specifically look at abnormal price movement, abnormal trading volume, and kind of try to identify how these different voting groups will behave in order to influence the outcome of these governance proposals. So been really fascinating to do this research.
That's a really great point. I think often we see the 80-20 rule, where there's only 20% actually contributing, but the 80% is on the sidelines, more of like an audience. So I have 2 quotes for you. In Web3, we thought giving early contributors tokens to a project would incentivize participation. Instead, it's incentivizing greed. What's your take on that? From the DAO research that you're currently conducting?
I'm so glad that you asked. I will try to answer this both from kind of an academic research as well as from an industry perspective. So if I were to kind of blend these a little bit to start, I would always compare the DAO world to the early days of the stock markets. So I think we oftentimes forget the early days of the stock markets. There were a lot of criticism. People were asking, well, why is it that we need to give any average retail investor the ability to own a share in a company that they don't even understand, or they're not informed enough to be able to read financial statements in? So there was a lot of pushback around, well, why are we incentivizing greed by allowing people to invest in liquid stocks? And similarly, there was a lack of regulation that led to a lot of insider trading. And in fact, if you look at the old headlines, there were plenty of headlines around the early days of the stock markets where there were people who were unfortunately committing suicide because they lost their life savings in the stock markets, right? So if I were to draw an analogy here, we're definitely in the early days of DAO markets where we are injecting liquidity where there used to be none. And as a result, it is incentivizing greed. But I would argue that in the long term, with better regulation, with better experimentation in this smaller sandbox of the DAO world, that we'll get to better outcomes, in that being able to become a stakeholder early on, and also, I mean, by owning a token, you're becoming a shareholder in some sense, right? By being a shareholder, you actually have a more active voice in influencing how an organization goes. So for the long term, we're actually hearing more diversity of opinions. At least from the DeFi DAOs that we're looking at now, we're seeing a very differentiated set of token voters that would turn out and participate in controversial votes where they otherwise wouldn't have a voice in the traditional financial services or banking world.
Let's take a different lens, actually, Boone. If you could maybe give some insights to how you're approaching DAOs from Carbon Land Trust DAO.
Yeah, absolutely. Thank you for your question. I think, first of all, DAOs, just like NFTs, are kind of like put into a small box. Generally, people, when you say NFT, they think JPEG image. When you say DAO, they kind of have the same type of limited scope. DAOs, in really a short thing, is it's just a different way to organize an entity. But the reality of it is that a lot of DAOs today are pretty much selling securities in a lot of ways, because their whole value proposition of their DAO is make a return on investment. Our DAO is different in that Carbon Land DAO, there is no expectation of profit. So our token sells for a stable price all the time, so that you're buying the governance token because you want to support forest conservation. And by having that governance token, you have a voice in where that forest land is going to be conserved. The other cool thing that we're doing to it with our governance token that's kind of different than a lot of things is, I like to say that Carbon Land DAO is a nature preserved timeshare. And so your governance token also is giving you the opportunity to book time to actually visit these forest lands that you help preserve and protect.
What are some best practices when it comes to that tokenization mechanisms that you're starting to implement as members get onboarded into the sphere of Carbon Land?
Yep. So we're just launching, and but some of the things that we're also looking into is like how people accumulate tokens when proposals are open, and we're also trying to figure out how to best make voting more equally weighted. So just because maybe you buy 10 tokens and you buy 10,000 tokens, should you really have that much more say in things? And just really looking at different models of weighting the voting power of tokens as well.
For June, maybe you can answer this from your university and from the FinTech Society. What sort of utilities and tooling did you leverage to start establishing and building out those governance mechanisms?
Well, so our university's DAO is quite different from your DAO, basically in the sense that our weightage system is very leveled, because we try to give opportunities equally to as many students as possible, right? So sometimes when we do voting, we only allow students to only put in one token, for example, so everyone has an equal chance of getting selected. And then this is more like a polling system, right? So it depends on the type of thing that we are trying to organize, or type of proposal that we're trying to organize. But generally, those with more tokens will in fact also get more say, right? And that's one of the issues that we are also facing. So we try to tackle this by, theorizing that we can actually solve this by using conviction style voting, which means that basically given a certain timeline, the vote will expire, right? So it's giving a sense of urgency to the vote and making those people with more tokens more anxious to vote for a certain proposal, right? So basically this would then lead to their tokens being burned, because once the vote is completed, we just remove their tokens, leaving them with less tokens and evening out the playing field, right? So those with more tokens will get burned, and those who voted but didn't actually get the proposal passed will just keep their tokens.
For the rest of the panel, is there any other utilities that you're seeing being adopted widely when it comes to being able to build tokenomics within the DAO or just voting mechanisms?
I've seen a lot. So token supplies are one where you would have greater turnout for some of those events. The way I categorize the proposals, and maybe to get everybody a sense of what it is more broadly, is I put them in a finance category. So there are people going out and raising capital, but it's also a lot about investment decisions. So are we going to form this partnership with this other DAO? Or are we going to invest in a particular, maybe let's put our treasury somewhere else, thinking about it like that way. We also have a whole category for management. A lot of these decisions are goals and strategies that a corporate executive would be doing. And big ones are compensation and hiring. Okay, you are doing that and deciding how much you're going to pay a person. So mind yourself, a lot of people were voluntarily contributing. They got airdrop tokens. But usually there was a vote on that, perhaps, and it was retroactive pay. So this is solving a little bit of the free rider problem, but these are people who are enthusiasts. So I think that you do have to think of more solutions to onboard the next 10 million people to DAOs, because they're probably not going to want to just volunteer their time. In terms of onboarding, we are seeing more and more people put responsibility and saying, yes, let's get a person who's organizing and paying and doing translation services, going through our Discord and making it much more useful. Even people hiring and getting people sort of more of your traditional HR. So sorry, I did financing, management. We had governance too. So thinking about all of this stuff, when people incentivize it, it does seem to be working more, but people aren't as interested in some of the governance votes. What else? Oh, I call it tokenomics, but it's really just anything that is about the token supply. It's about what collateral we're having. You know, it could be other categories. So if you're a DAO that's not necessarily a protocol, this is going to be, are we issuing some NFT to sort of raise cash for whatever we want to be doing? And then the last category was the one I was really thinking about, is this viability in the long term. And so this is your advertising. A lot of them are advertising, but it's how you're marketing to people to bring more people into the community. But it's also thinking about your upgrades, and any of your risks. And I think a lot of people forget how much counterparty risk there is in this situation, because many people are making these decisions about their treasury or partnerships or some type of joint venture where they're going to go and invest in another DAO. And so you start to have these situations where, you know, when 3 Arrows Capital went down, you see reverberations throughout the system. But that's sort of what I think that they're doing, and hopefully seeing better practices emerge.
So I said I'd follow up with another quote for you, Shuo. Ready? All right, so if the extrinsic incentive of a promise of rewards was removed from a DAO, there would be far fewer contributors and the community is virtually guaranteed to fall apart. What's your thoughts about rewarding systems? And this, actually, Boone, you could probably chime in, especially since the rewarding between a DeFi DAO versus what you're doing is completely different, right?
Yeah, absolutely. I'm sure Jill and I can talk all day as well about kind of underlying economic incentives. But if I could kind of build on that a little bit to say, I think in the DAO world, we're seeing a little bit of a different realignment of incentives in some ways, in that in the past, majority shareholders, for example, have a lot of incentives. So at least in the traditional finance world, you have these block holders who are active participants. And of course, they have to report, at least in the US, when you're above 5% holdings in a company. And there's a certain set of behaviors that we've observed in the traditional finance world. But when we look at the decentralized finance world, it's a little bit different, because if you think about it, technically anyone could copy paste the entire code base of any decentralized finance platform, replicate that, make one minor change, and have a complete new community that's up and running. So the incentives are a little bit different, because you're almost more incentivized to listen to voices from users that are bottoms up that you would not observe in the traditional finance environment. You can't really imagine a major bank responding to the request of any individual user, say off of Twitter, but you certainly see a lot more where if someone says or comments on something on Discord, and you see a lot of other users agreeing, that you actually see governance proposals shifting. So you actually see a better alignment of incentives in some sort of way, as in that this feedback more effectively kind of filters or ripples up. So I think it's a really helpful way for us to think about how do we potentially realign incentives across the different stakeholders in an ecosystem.
And I'll add to that, you know, incentives are, like you mentioned, they're either extrinsic or intrinsic. And so if you're talking about a DeFi DAO, it's always extrinsic. Your benefit is, hopefully it's going to go up. In our model, you know, so people already all over the world every day donate to support conservation. And they do that purely most of the time for the intrinsic value of feeling good about their contribution towards preserving nature. And that's kind of the bottom line value that we have in Carbon Land DAO's governance token is that you can feel really good about buying our governance token because you're creating old growth forests for future generations. But I also would say that we still have intrinsic, even though it's not a financial thing, by allowing people to go camp, visit, spend time on these nature preserves. It may not be a dollar reward, but it's actually a very rewarding experience.
I wanted to switch gears away from governance and maybe talk about best practices, because if we're talking about DAOs, we need to talk about the DAO. And that use case, and also Badger DAOs, there's been multiple breaches when it comes to gamifying smart contracts just to be able to drain or liquidate the treasury. What are some maybe utilities or resources that you guys are using maybe to build DAOs intelligently?
I would say many have put proposals out there saying, what are we going to do in terms of if we do get breached? And are we going to pay back or use some of our treasury to reimburse people? I've also seen a lot of proposals about being very careful about starting to hire auditors. I have unfortunately not seen it in prices. Was thinking that we might have some of this monitoring role and that effectiveness would translate through. And I think the other thing one proposal I want to bring up is this difference, which we see a lot of heterogeneity in prices and volume of if it's brought by a core contributor versus a community member. You can definitely trade and see differences there. Sorry, those were just some quick ones.
It is definitely still a popularity thing a lot of times in DAO governance.
Yeah.
Sorry, please.
You go ahead first.
If I could kind of build on that a bit more, I think we're also seeing different job titles emerge in the DAO space as well. Actually, bring back to an old conversation we had with Lauren, one of the fastest rising job titles I see in the DAO world is this title of Chief Community Officer, which never really existed before, because as much as users were important to you, or your end customer, your end client is important to you, you never really had your users be able to get together in a very distributed way and have a lot of power together. But in a decentralized organization, in the case of a DAO, you actually have users that can get a lot of bottoms-up momentum in influencing change. So I'm actually seeing a lot more kind of best practices, so to speak, implemented through these new roles that are implemented in order to help guide some of the conversation.
Yeah, so I think that is exactly what you were saying before about authorizing responsibility. I think that's the key thing for DAOs right now is discrete responsibility. You have a person, you have a group. It's almost like creating a board of directors then that each have their own little function that they're best at, or their sub-DAOs. And that's where you can actually have these smaller conversations and build more momentum and actually produce results that then people are voting on. You sort of see that coming out. And I would say, though, this is one thing that I know Shuo and I have talked about a little bit, is you're seeing all these negative returns, though, on votes. And so why are you seeing negative returns on votes? You wouldn't necessarily assume that was going to happen, but it is actually because of this authorizing responsibility. If you think through of what the business judgment rule, if we go back to classic corporate finance, the value of a voting right is relatively small compared to equity prices. It's maybe 1%. So as we're authorizing more and more responsibility, we're actually becoming more corporate-like. And so you would expect when then these proposals get passed that you're taking away what is this expectation, even though I know he says there's no expectation of profit, there has to be some expectation of cash flows at some point in time that you can change the governance system to pay out a dividend. It's just got to be there. And so this is where I think why we're going to see more governance tokens perhaps losing some of their value.
Yeah, go for it.
Just to add on, something that you mentioned was having a board of directors of sorts. That's actually something that we kind of are doing, right? In the sense that we actually have different levels in DAO. Technically not everyone is equal in the sense that you still need a governing body because a DAO can't run by itself, right? If you just leave it to just the community members to run, it's going to fall apart real quick, right? So you still need some sort of management in place, and for that we try to allocate different roles based on what they are in charge of. So for example, directors will tend to get more tokens based on the roles that they perform, and that incentivizes them to keeping up their managerial duties. And to manage the DAO and make sure that it's a vibrant community because it benefits both them and the community, and in the end it makes a more holistic DAO. Yeah.
Once you get out of the community and you're looking to scale it, maybe we talked about individuals get selected as chief community officer. Sometimes you'll have guilds start to conform and build and generate within DAOs. You'll have sub-DAOs go off and branch to do their own implementation. How do you make sure that the mechanisms in place allow that fruitfully and organically in a decentralized way?
So Carbon Land DAO has managers because we're buying physical property. People have to enter contracts, and you can't just have random token holders doing that kind of stuff. But the managers of Carbon Land DAO answer to the governance token holders. So, I think it's a learning process, in all honesty. Kind of our go-to-market strategy is actually to propose a lot of these questions you're asking to our community to help even form that in the very beginning.
And I could point out it is such a traditional corporate thing, but it actually has worked successfully. I know at one DAO where they had the same question to me. They were saying that their subgroups don't actually communicate well with each other, and what can we do? Because they're going off and basically replicating each other's activities.
That's just the office.
I know. But they started to do this, get more uniform debriefs, but also this idea that we have to rotate, that there is a certain set of people that are going to rotate and be on different communities, so this knowledge is passed through. And I think that idea of, if you want to have a flywheel, you got to have, some circular momentum, you got to have some happiness within the group and consistency.
And I think one of Jill's earlier points is super important as well, which is what are the mechanisms we need to put in place to bring on board the next 10 million users, right? So if we were to think about, kind of take a step back, we are still in the very, very early days of DAOs. In fact, we had a conversation the other day where we were saying, is DAO in its teenage years or is it even earlier? So we were just kind of thinking about kind of this bigger picture. If DAOs are so early on, what are the important pieces that we actually need to get on board in order for the next 10 million users to even be comfortable with onboarding? And what are those steps that we need to bridge this gap between the traditional kind of Web 2 world to the Web 3 world? Because you're going to need buy-in from the largest institutional investors, because after all, a lot of the capital still sits there. And a lot of those similar mechanisms are going to ripple upward, so to speak. So one example, at least in the financial space, is that typically you don't have individuals wanting to select or buy kind of one or two individual DAOs. Kind of similar to the stock market, a lot of where the capital sits is in these ETFs and indices where they are packaged by an institution that people have trust in. There, of course, is regulatory oversight as well. Capital sits there in these packaged financial products that select for the largest stocks, say like large cap tech stocks, as an example. So we're going to start to see some of those echo and rhyme in the DAO world as well, where over time, if we do want to get more participation, we can't expect end users to be in the know of every single DAO, but we'll see some more structural support in that way as well.
Yeah, so I think Index is a great example of that, and this also brings up one other point, which is the meta-governance point of, what are you doing if you do own all these pieces or pieces of a different DAO? How are you going to do the vote through of the governance? And should we put it to the Index token holders, or should we basically, assume ourselves? And so people have actually been working on this, how we solve some of these problems of this ownership, where it does pass through.
So just to wrap up, for individuals who are in the crowd right now, maybe they're a part of LLC, corporation, organization, should they just completely convert to a DAO and call it a day? Or maybe university students who are looking to build their next startup, should it be a DAO? What's your take? Maybe we could go down.
I would say, a DAO is not like the easy thing to do. So, just because, there's been some DAOs that come out and have radical success with their token right away. Reality is if you're going to start out, you need to look at just like starting any other entity, and you need to do it right. Look into the regulations in your space and your industry, and really just understand that a DAO is taking kind of, I like to say, we're talking about stocks earlier. So your stock gives you a shareholder right to vote. It's very hard to actually vote when you're a shareholder. You have to either attend meetings or send in your proxy, all this kind of thing. A DAO is a structure that gives you, makes your voting a lot more accessible, and but it's not an easy thing to do if you want to do it right.
Yeah, I would agree with Boone on that because like based on the maintenance like effort that we have to put in to maintain a student-run DAO, it was really like tiring, and it really takes a lot of micromanaging and commitment, especially educating the students who do not know what DAO is. So you plan to include a very wide community in. Like of course, education is very key. You need to start early. You need to let them know what it is, what it's for, and but perhaps DAO might not exactly be the best use for like a super large scale organization. But I think like on a scale of like maybe 10,000 people, I think DAOs make sense.
And I think it's a really great use case. I think its flexibility is amazing. But where are you going to see it grow? It's a service. Why is financial services the one that's like adopting? Because that's a great way where you can cut around burdens. I think it's going to be other organizations like museums and stuff like that that have all of this intangible value that's basically locked up. And by decentralizing it, we're actually releasing some of the value and perhaps be able to onboard more people to be owners of part of that value chain. And so thinking through which organizations are sort of at the border of providing some type of public good, but in a private space is really who's probably going to have to be the next people to onboard. And I always joke that I think we need to have a religion come up too, because you'll get a lot of
Taoist, yeah.
Yeah, we've definitely been talking about that even in the startup space. I definitely agree. In fact, I think it's fascinating to think about the ability to inject liquidity into things that we didn't have liquidity around before. Like museums are a great example of this. If you sat on really expensive art pieces before, there was very little you can do about that. But now there are plenty of startups that are building platforms that allow you to basically borrow, lend, and earn with things like NFTs that are worth a lot of money. So how do you then inject liquidity into otherwise illiquid assets? I think that's the direction overall in which financial markets have always been moving towards. And where I do think DAOs are really cool to think about is that it's actually really helping us reimagine what the next generation of jobs might look like. And I mention that because in the DAO world of things, you see where a single individual can be a contributor to multiple DAOs, and so we're rethinking the traditional role of one person only being able to work one job, but it's saying, hey, if this person is particularly good at this particular task, maybe they can contribute in a similar manner to multiple organizations that need that expertise and know-how. And I think the last bit of this is also reimagining jobs in thinking about diversity of talent that it attracts. Because when I look at the DAO space, I'll see that there's actually way less reliance on traditional academic educational accreditation than any time before. So you actually see a lot of people just being able to work on really high quality projects, not because they have a degree, but because they have had former project experience on a number of relevant things. So I do see there's more diverse talent that's being attracted in, where as long as you are passionate about building and you get these hands-on experiences, that you don't need to have necessarily had the access to the best universities, but you would actually be able to tap into those ecosystems because you've self-taught and learned the relevant skills there. So it does make me pretty excited about all the more equitable opportunities that hopefully it brings.
I think we have to stop right there. Do we have any time for questions? Nope. Okay, good. All right. Thank you, everyone.